I want to talk about following the crowd and the role of expectations. One of the reasons that blindly following the crowd or following the most popular investments at a particular point in time has a lot to do with what the expectations are for those investments and what the general population of market participants expects. For example, if everyone expects, or if the popular press writes about house prices that are expected to rise, then sellers will demand higher prices on the expectations that prices will be higher in the near term. And buyers will also typically be willing to pay higher prices on the expectation that prices will continue to rise. So the fact that everyone is saying, and the popular press is saying, that house prices are expected to rise often leads to higher prices already today. And these expectations, therefore, are very often, if they're commonly known, reflected in the prices of houses or securities or stocks. So in other words, expectations when they're commonly known, have a lot to do with what is already reflected in prices today. And smart investors spend a lot of time trying to figure out what others aren't expecting and what is not reflected in these prices and what others don't know or haven't figured into their calculation, and making an assessment based on that. And that's why thinking for oneself is so important, and having financial literacy and some affinity to the whole subject is so important, because blindly following the crowd often leads to some of the worst investment decisions. Now that doesn't mean that one should always do the exact opposite of what the crowd is doing or what the popular press is saying, but one should always question the things that are written and why, and what the expectations might be. And other examples of how this manifests itself are, for example, in the stock market, when the expectations for a particular company are very, very poor, and the company comes out with something that's even just slightly better, then that stock could rally quite strongly on the basis that that was not reflected in prices and the expectations was markedly different. The same thing if everyone is expecting something very positive and it ends up coming out very negative, that would lead to a significant drop.